V. Raman, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career ambassador. This video is relevant if you are studying UK taxation as part of your AAT level 4 personal tax, or if you're a student of ACCA F6 UK taxation, or if you are studying UK taxation as part of your undergraduate accounting and finance degree. This is a task from AAT level 4 practice assessment personal tax based on Finance Act 2023. Task 6. So I will show you how to approach this type of question. If you can take a picture of this question, if you don't have access to AAT level 4 personal tax practice assessment, AAT practice assessment 1. Hopefully you have taken a picture of first two parts of this question, which is part A1 and part A2. Now the first part of the question is, if occupational pension contributions are made, remember occupational pension contributions are tax-free. So there is no tax on these on these occupational pension contributions made. So if occupational pension contributions made, monthly amount they have given us as £200, so which means 200 times by 12, that's 2,400. So this entire amount will be tax-free. And I'm sure you must have noticed in your pay slip that your pensionable pay is different from taxable pay. And remember, any occupational pension contributions are tax-free, so no tax on this. And if the same amount will be contributed towards personal pension contribution, remember that personal pension contribution, gross personal pension contribution, extend the basic rate band threshold, and if needed, higher rate band threshold. Now in this situation, the person's total income is just one income, and which is 52,500. So which means that only basic rate band will be extended by the gross personal pension contributions. So the gross personal pension contributions are 3,000. How we calculated that, which is 2,400 divided by 80 times by 100. However, this person will not be saving an amount of 3,000 due to their total income. So if you think about it, their total income is 52,500 less personal allowance of 12,570. So which gives you the basic, which gives you the taxable income basically, which is 39,930. Now remember, the normal basic rate band threshold is 37,700, and if you add 2,400 or 3,000 essentially, but even if you add just 2,400, that's equal to the taxable income. Actually, it's more than that. So in other words, that what this person will be saving, this person will be saving on the additional personal pension contribution 20% tax, because remember the basic rate band threshold has been extended. So therefore, on this 2,400 personal pension contributions, the person will be saving 20% tax on that. So in a nutshell, that if this person makes personal pension contributions, they will be paying £480 more as compared to if they make, or if this person makes occupational pension contribution of 2,400. So remember, the question was that how much more tax this person will be paying if this person selects a private pension scheme. Okay, so if private pension scheme, this person will be paying £480 more tax than if she selects to pay into personal pension scheme, basically. So that's the part one, part A1 in other words. And then part A2 is in relation to the car benefit. And the question is that this person is a higher rate taxpayer and this person has been provided a diesel car and the diesel car does not meet RDE2 standards. Now remember, if the diesel car does not meet RDE2 standard, that means that the scale charge, fuel scale, not fuel scale charge, sorry, the scale charge as a CO2 percentage will be 4% higher than the petrol car. So if this person was provided a petrol car, what they will be doing, they will be saving 4% on the car benefit will be reduced. So as you can see, the 36,200 was the amount applicable for calculation of car benefit. So therefore, 36,200 times by 4%. Now the question is about tax saving. So that means that on this 1448 amount, remember that if it was petrol car, that this 4% would not have been added in the scale chart, CO2 percentage. So therefore, this person will be saving 40% of that amount. Why 40%? Because remember they told you that this person is a higher rate taxpayer. So therefore, the tax saving will be this times by 40%, which gives you 579.20. Now remember in the question, they ask you to enter the whole amount, and the whole amount in this situation will be 579, of course. Okay, and then part A3 is another mini scenario. So in this scenario, there's a different person, of course, Mr. X, a higher rate taxpayer, has inherited 50,000. He currently has no investment income and he wants to invest the money in the most tax efficient way. Now remember that as part of the individual saving account, the person can invest up to a maximum of 20,000. So that will be the tax efficient way of investing it. Anything more than that is going to go to the normal saving account. And the return, they already told us that it's going to be 2% on that investment. So in other words, it will be 2% of the 30 grand. So let me show you. So as you can see, individual saving account investment out of 50,000, 20,000 will be invested in there. And then invested in normal saving account, anything more than 20,000. Now remember that shares is not an option for this person as it's been given to us, that that's not, this person is going to invest. So that means total cash was 50,000 minus individual saving account 20,000. So that's the 30,000 normal saving account. And remember the return on that is going to be 2% of that, which is this times by 2%. And out of 600, now remember, since the person is a high rate taxpayer, that they will have a personal saving allowance of 500. So there is no tax on first 500. And taxable saving income will be 100 now. How? So which is total interest from normal saving account will be 600, and out of 600, first 500 is covered by personal saving allowance. So the taxable saving income is 100. And remember the tax liability on this will be 40%. Why? Because the person is higher rate taxpayer. So this person will be paying £40 on this savings income. So the answer to this is £40. Now, the final part of this question is Mrs. B has been offered a loan from her employer, 12,000. This is the only loan she has had from her employer. The terms of the loan are that she does not need to pay the loan back for 5 years and she needs to pay no interest. So, in other words, that um, this is a beneficial loan. Remember, anything more than 10,000. So, small loan exemption is up to 10,000. So, of course, this is more than that. So, if this was on commercial basis, in other words, that if official rate of interest is paid on this amount, then there won't be any tax that she will be paying. So therefore, the official rate of interest is, remember, 2.25%. And if it was on commercial basis, meaning that at least at official rate of interest, so this person will not be paying any tax on that. So hopefully that this video is useful. So this is in relation to the tax planning. The key thing to consider here that you do not have to calculate using a step-by-step approach or anything like that. It's just that one of the tax or one of the income you need to calculate tax on. So there is a little thought process in relation to these questions. But once you understand it fully, and if you know how to approach these questions, then you will be fine. Okay, thank you very much for listening. I will be back with another video. Bye for now. It's not a game.